Now it's time for On Point, where we speak to experts to delve deeper into the biggest news stories in the spotlight right now. The global economy is dealing with a number of potentially destabilizing uncertainties at the moment. The pandemic, of course, remains at the forefront, but there's also the crisis in Ukraine and various tensions swirling around, which are giving the markets jitters.
In South Korea, with the presidential election a matter of weeks away, the candidates have been making pledges about how they could lead the country out of this period of high inflation, virus restrictions, and skyrocketing housing prices. Unfortunately, there's no easy fix, as past presidents quickly came to realize. For more, we connect to Oh Jun-sok, professor at Sookmyung Women's University School of Business. Good morning, Professor Oh.
Morning.
So many experts are now saying the Omicron surge could reach its peak in South Korea by early March or so. Do you anticipate the economy would flourish once we're over the worst of the pandemic?
Hope to see the bright side, but I think the economic outlook does not look that positive in 2022. In 2021, Korean economy grew 4%, a rebound from 0.9% in 2020. This year, Korean government has set its target at 4% of growth. It is expected, however, that the Korean economy would hardly gain momentum because there are two major risks: a market risk from China and cost-push risk from Russia. Slowing China will cast a dark cloud over Korean economy. China accounts for 15% of world trade and takes a quarter of Korean export. Last December and this January, Korea recorded trade deficit consecutive months for the first time in 14 years. China is not only the biggest consumer market for Korean products, but it is also the key supplier of Korean producers. Another risk comes from Russia. The trade deficit has already been the result of an unstable energy market. The situation could remain unfavorable, particularly due to ongoing conflicts in Ukraine. And tension between Russia and the U.S. over Ukraine have driven already higher oil prices for Korean economy. These risks will increase overall production costs, losing margin and competitiveness in international trade.
Okay, we'll touch upon Ukraine in just a moment, but inflation remains the thorn in the side of a great many countries. The U.S. in January seeing inflation hit a 40-year high. Isn't much better here in South Korea. Is there much that policymakers can do in their respective nations to counter inflation, or is this just something that has to be ridden out?
Once there was an earthquake, there will be unavoidable afterquake. Inflation is not the cause of printing money, but the result of spreading money, which is done already, unavoidable now. I'd like to carve out politicians from policymakers. At this moment, what the politicians can do is to stop sugar-coated lip service of populism anymore. If not, financial volatility will be widened into stock market and further into foreign exchange market. Promising money injection driven by political calculation will turn out only to be another earthquake and afterquake. The thing for policymakers to do now is decreasing money supply, so-called quantitative tightening. At the same time, the market contingency considered, a step up of interest rate in a series is needed to curb down the inflationary pressure in the market. And that is because the production slump caused by supply chain bottleneck is leading to a rapid increase in prices. The Bank of Korea is projected to revise upward its inflation target to 2.8% for 2022 from an earlier 2%. What it needs most is not big hug nor big hand, but big head.
Now, Professor, South Korea's Financial Services Commission has closely watched meeting upcoming later this week. So with many economic issues at the forefront of many people's minds, what do you expect them to announce?
Amid recent volatility in equity market, the Financial Services Committee has raised market monitoring level up to caution. The authority will continue to closely monitor financial market condition at home and abroad to check potential risk factors. Real estate market should be monitored. It is expected that the meeting will discuss the potential impact of market volatility on the household and corporate debt situations. In this end, the urgency of stabilizing housing prices, housing loan will be minimized. And then another thing we have to add is financial market volatility seems to be unavoidable for some time due to a number of factors, spread of the Omicron variant, slowdown in China's economic growth, and the Russian-Ukraine conflicts. As Russia wants strategically to make an alliance with China, they might have counted the days waiting for the closing of Beijing Winter Olympics. And the Beijing hosted Olympic is over. It is highly necessary to monitor markets to prevent market anxiety from spreading excessively when export and growth indicators are standing sound and strong.
Okay, and finally, senior finance officials from the G20 nations met last week, and they warned that the crisis in Ukraine threatens the post-pandemic recovery, especially if it escalates into a full-fledged war. How do you think international markets and national economies would react if there is a full-scale war between Russia and Ukraine, potentially dragging in other countries?
It will be a perfect storm, definitely, in the middle of economic recovery from the pandemic. The Ukraine crisis is not a distant problem. Korean geopolitical risks from powerful neighbors resembles those of Ukraine. The crisis will surely push up international oil and grain prices. If Russia shut down all the pipelines carrying gas to Europe, gasoline prices in Korea already surged to 2,000 won per liter from 1,800 won. Red alarm of stagflation is on. Russia is the world's top wheat exporter, while Ukraine is one of the 4 major corn exporters globally. Ukraine, long known as the breadbasket of Europe, actually sends more than 40% of its wheat and corn export to the Middle East and African countries. Korea's grain import price hit a record high in December last year. There might be concern over potential agflation, combination of agriculture with inflation, global food price rise. If the crisis the crisis spill over into a war, the natural gas export to Europe would be cut. If the U.S. slaps sanctions on Russia, vicious cycle moves to financial instability, amplifying foreign exchange volatility, capital flies from the major financial market, fighting for the safe haven. All the instability could lead to a knock-on effect on other markets. This crisis might turn into another global economic crisis.
Right, let's hope the situation could get better. Professor, thank you so much for your insights.
Thank you for having me.
Thank you.